All right, let's do a quick top-down analysis of gold futures using ICT concepts. So we've zoomed out here. We're looking at the monthly on the MC, we're looking at the micros, micro gold futures. And what we see is going back to when this starts is October, end of 2010, so close to 15 years here. And we see that for a large block of this time, gold was in a range between the high over here and the low down over there, right? So we were in a range for many years. We broke out of this lower range here. I guess we can divide this from here down till here. We can divide this into quadrants, and let's spread it across here so that we can watch it more carefully. Let's make that a little further. All right. Well. Okay, so we see that we've formed this range from the high to the low, and then we stuck around the lower quadrant for a little while. We swept liquidity below this low, this intermediate term low here, just barely, but we did over there. Then we moved up and broke out above these relatively equal highs over here, or even all the way, let's say from here down till there or so, right? We broke above that and continued going higher. We broke into the, we went from extreme discount to discount, and then we chopped around the midpoint of this range, equilibrium of the range. See how we wicked up, we wicked down, we wicked up. This was March of 2020. So there's a lot actually happening, and that was the beginning of COVID, I think, when the COVID reactions began in February and March. Then I guess the concerns about COVID led to a rally in gold, I imagine. I wasn't watching gold then. Notice we have the SIBI over here, which is perhaps the measuring gap. I think maybe Michael, ICT would refer to it as a measuring gap. I don't fully grasp that. I get a bit of it, but not sure how he would know in advance that that's a measuring gap. But I could see that looking backwards, right? And then we moved up and took out these relatively equal highs above here. So in August of 2020, gold peaked for then and swept liquidity above these relatively equal highs. But we still had this kind of rejection block up here that was being respected. We wicked into maybe roughly 50% of that rejection block, a little bit more than, from eyeballing it, it seems more than 50%. Let's see. Let's make that whoops. Let's just mark that off here. Rejection block. And we are on monthly, reminder. Like, look how clean the price action is. All right, and we want to see this on all time frames. Okay, so we had this, oh, sorry, I'm missing the 50%, the middle line. All right, so we wicked just above 50% of this rejection block here, but we respected that, came back down, chopped around, and here we had lots of sideways chop. So in the in premium, we'd come back down from extreme premium into premium, and chopped around, but we also would not close below equilibrium of this dealing range. We did not close below equilibrium, as we see over here. We did wick below it twice. We wicked below it once, came back up, wicked above into the top quadrant, took the liquidity above there, came back down below. So what we see here is a double purge. We purged, I'll just zoom in here a little bit. We purged liquidity above and we purged liquidity below. Right, I was over here. Okay, so we purged liquidity right there. Okay, let's mark that with the X above. All right, wicked above, and then over here we wicked below. We'll mark that off down over here, purge liquidity below. All right, so the double purge over here, and that means we're very likely that we're going to go back to the side where we initially purged liquidity. So that would be up over here. So on this month, in August 2021, we would be looking for long setups to go take out liquidity above here. And that is what we in fact did, coming back up to the rejection block. This time we didn't even, doesn't even look like we got to a 25% of the way in. Wicked up there, rejected pretty forcefully. And this time now, we've taken liquidity above all this low resistance liquidity. And then we retraced back up on our way down. Again, if we mark off this this wick, treat wicks as gaps, we come in less than 50% of the wick, really respecting it, and then we start going lower. And we're heading for sell side liquidity now below this low here, coming back down into the this wick down here. Let's extend that across. 113. Now, when I started this, I did not actually anticipate spending all this time on the monthly time frame, but I'm finding this very helpful for myself, so hopefully you do as well. All right, so we came back down, right? This wick had swept below the previous swing low, and wicks are like gaps, ICT teaches, and we've respected, for the most part, this wick gap, right? Bodies respected the equilibrium, consequent encroachment of this wick. And notice again how we put in a low, went back up, respected that previous month's high, put in a low. Well, I guess we would say I'd have to look back on the lower time frames, but I assume that it's not clear to me, of course, looking back like this for over a month candle to know for sure which wick was first. Did we open, go high, and then low, and then close there? Or did we open, low, or high? That's probably the most likely. But anyway, we towards the end, we went higher, respected that, then came lower and closed here. That's presumably what happened, took out the previous month's low. Next month, we opened a bit of a gap lower, went lower, took out liquidity below the previous month's low, right, once again. And then we targeted lower resistance liquidity from the previous 2 months, coming up and closing above this, but wicking higher. The next month, we opened up with a nice, real big gap over here. So this was a pretty big gap with this BISI here. But it was overall not, it was a relatively small range month. Pushed up, retraced a bit, right? A little bit higher, lower. Let's see here. We now came up into this wick here, and we could look at this wick. Let's watch that. All right, so we came up, respected consequent encroachment of this wick as well. All right, notice how we pushed up, went a little bit sideways, took liquidity above that, respected, we did not yet go above here, and then that third month, we took liquidity above here, but did not go into premium. So we're still in discount of this wick, which is a bearish sign, and we came down and closed below the previous month's open and close and wick. So that's pretty bearish. Then we continued lower, but sideways for 2 months with some wicks lower, came back down into this BISI, bias side imbalance, sell side inefficiency, wicked lower through it. The bodies respect consequent encroachment of this BISI, closed above the previous month's high. Next month, we wicked down about roughly halfway into the body of this wick, closed above, right? Wicked above all these the low resistance liquidity over here, came back up into this rejection block, if you will. And then we've been kind of going sideways for a while now, forming a range, really. We could look at this whole thing here as a range easily. What did I have that for? Oh, okay. Sorry. Yeah, that's we're coming to. So we have the range over here and a range over here, and we broke out. In March of 2024, we finally broke above these recent highs, taking that low resistance liquidity, and then continue moving higher. Gapped up the following month into April, from March into April, gapped up, wicked up above this resistance, this rejection block. So that's, and then, over here, looking just at, well, let's just pull it through so we can see a little more clearly. But over here, we're starting to see that maybe we're going higher. But I don't know that I would have recognized that from the performance of April on its own. We did have a BISI, and that is a bullish sign. And we respected it in April. We did wick up higher, and the body stayed in the lower half of the rejection block. But then in May, the body kind of went, we chopped sideways for much of the month, again, wicking up, taking out liquidity above the previous month. So that is not necessarily a bullish sign. But we also, then the next month, we went below the previous month and came back up. So over here we have, over here, again, we have a double purge. So we're moving, here, I'll show you. We're seeing bullishness, and then we took liquidity above there. All right, so we moved up, and then the next month, sometimes that really confuses me. Not quite sure why it hangs on to that. And the next month, in June, we took out liquidity below, right? So just make sure that's really clear. Zoom in. So we purged above, purged below. Once again, when we do that, it's likely, especially if with a bullish order flow, that we're going to go back and take out. We're going to continue in the direction of the first purge. You can argue that that's what happened over here, right? We took out a purge above here, purged below, and then we went higher. But that seems a little bit more forced than over here. There are different ways that shows up. I'm just observing that. It's not something I feel like I fully feel like I've mastered that. Okay, now then, beginning at the end of 2023, October, we can see that we really began this very bullish leg up, where price, the price of gold futures went up like 67%, roughly, or even more. And I drew from this low where we swept liquidity below, from this swing low to this swing high, I see this as a significant dealing range. And notice how at about the 50% mark we have this order block, right? Or this. So if this is, let's say, a market maker sell model, so we have original consolidation, and then we have low risk entry long. We have original accumulation, reaccumulation, pushed up, and then somewhere around here, we might now be in the middle of a smart money reversal. We might be starting to see gold retrace lower. Now, I don't know if it's going to be a full retracement, or like, all the way back down. I don't know. Are we going to see a retracement all the way back down to original consolidation? I don't know. I think that's beyond my ability to predict right now. But what we definitely can see is that we are in premium, right? If discount is from here and premium is above 50% and extreme premium is in the top quadrant, we are in extreme premium on this range. Some kind of retracement would not be a surprise. So are we likely to see some kind of retracement? And if we look at the last 3 months, and we have 1 day left of trading in the month, 1 day and 8 hours for this futures contract. So it'll open up on Sunday evening, New York time, and then trade for another day and 8 hours. We have this also this rejection block on the monthly candles up over here. And so far, we're definitely respecting that. Now, let's go down to the lower time frames. But before we do, I just want to point out that this month, which again hasn't closed yet, we still have another day or so, and who knows what will happen in the next couple of days, but we'll see. This June candle, we wicked above. It's very slight, but we did wick above. This candle's high was 3,476, and the May candle's high was 475 and a half. So 475 and a half to 476 is literally half a point, which is not a lot. That's why it's hard to see. All right, literally half a point on a significant, right? But we did wick up, and that would qualify as a liquidity sweep. It's not a major sweep, but it is something that allows price to retrace in the other direction, or to reverse in the other direction if that's what price wants to do. Let's now go down to the weekly candles, and we're going to look at this section of price. Okay, on the weekly candle. So again, we have the main thing that we're looking at is this range here, right? This is what I want to focus on. I'm going to make that a little bit thicker so that we could see more clearly. And I'm going to take this off for now, just to neaten some things up. I'm going to take this old rejection block off. All right, and let's see, what is this range? Oh yeah, this was the previous range that we broke out from. So I'm going to take that off as well. All right, clean up the chart a lot. All right, good. Now we're starting to see, again, this is the what I would say is, the buy side of the curve, right? And we're probably going to see a sell side of the curve soon. Now, looking here, we're beginning to see what might be a smart money reversal. Don't yet know, but I'm seeing signs of bearishness. But again, we're on a weekly chart, so we'll have to see what's happening. Let's look at this more carefully here. So again, this weekly candle, which was 2 weeks ago, we wicked up and just with half a point took out the previous high from over here. We still have respected the high of the all-time high, so we haven't gone there. Just move these over so we can see them. All right. What do we want to notice here? So we are in a range once again, right? We've been going sideways from approximately April of 2025 through June, April, May, June. So for the last 3 months, we've been going sideways for the most part. We had a BISI over here, which we closed below, inverting it, and then kind of respected it again and then closed below. We've really just been chopping around this buy side imbalance, or inversion for value gap. And then over here, looks like we went lower. No, we opened high, low, and close. And over here, we wicked above these previous 2 months. And then we closed up, down. Okay, so now these last 2 weeks, we closed below the previous 2 weeks into this inversion over here. And now question is, what's most likely for next week? Let's drop. What we noticed is down here, we have this swing low. We notice we have the quadrants of this wick. This is the equilibrium of the high time frame range. Now, I'd marked off another range, which is the range that we have from here, from this low to that high. And that's within the upper half of that, much more higher, multi-year buy side of the market maker model over here. So we're going to look at this range from this swing low or intermediate term low to this all-time high to analyze for the coming week of trading to see what is likely to happen. What else we have here? Okay, I think we're going to drop down to the daily now. All right, so now we're dropping down to daily, and we can clearly see, and remember, we're at the very, extreme premium on the weekly and monthly. But if we're looking at the range from this low to that high, let's make that easier to see. Let's make those levels more visible. Okay, so we've rejected off of extreme premium, taking out that high by half a point, came down, chopped sideways around the top, let's say 75%. I guess I don't know exactly which side to start from, but let's just say 75% from 0 to 1, even though it's marked off as 25% over there. And then we've come down and literally just touched the 50, the equilibrium of the dealing range. So the low on that candle is 266.5. Let's see what price is at equilibrium. 266.5. Equilibrium is at 267.5. So it came 1 point below equilibrium. Again, that's not a lot, right? So, and then we are rejected back higher. Over here, the low is 268.6. The low is 266.5, and this is 267.5. So this low here was a little bit higher, 268.6, and this is 266.5. So we came a little bit lower, took out liquidity below that previous low, and we're about 50%. Now this would be the previous week's low when we begin trading Sunday night, later tonight. So that is something for an important level for us to keep in mind. Previous week's low. Let's look at this on the day. Oh, we are on the daily. So 1 second here. Why I'm not seeing that? That must be a 4-hour volume imbalance. Sorry, this is getting messy. Yeah. Okay. So this is not a daily. That's a 4-hour. Fix that. There we go. Okay. All right. So we have these daily volume imbalances above us. We're in this BISI here on the daily BISI right here, right between this high and that low. So we haven't closed below it. It would not surprise me if we retrace back higher before going lower. Okay, how high, I don't know. But my bias on gold is lower. It's and I would be looking for a bit of a retracement higher before going lower. And I'm going to go down now to the 4 hour. Okay, and we actually have a really nice dealing range here in the 4 hour. It's very clean. You see this going back. This is the one that I showed you, the most recent one we marked off. All right, from low to high, came down into the minor discount, premium. All right, this was one of our wicks on the higher time frames. Coming back down, and now we're looking at, we're right above equilibrium. So we're in minor buy side here. But if we looking at this on the 4 hour, seems like we now have a small dealing range over here on the 4 hour, where it is totally possible that we retrace back up to consequent encroachment or equilibrium of this dealing range inside this SIBI over here. Now that SIBI also aligns with a bearish breaker. We had a high and a low, higher high and a lower low. So, whoops. My expectation is that probably early in the week, we're going to move higher into this SIBI. Perhaps we'll go even a little bit higher into the previous one. I don't know. Maybe into the OTE levels of 62 to 79% up here before going lower and closing the week lower than where we started. That's what I'll be looking for. If we go down to 1 hour, we see that on Friday, 9 a.m. Friday, we wicked lower and then moved higher. This second wick came down into about, not quite halfway, as it seems to my eye. And then we chopped sideways kind of before the end of the week. So we had a weekly candle was definitely bearish. So we opened up the week over here, moved up, went down, not quite all the way, right? Put in this leg down, retraced a bit, another leg down, and then retreated a bit off the lows before closing on a very bearish week. Okay, so we'll have to keep our eye open on that. Let's go back to the 4 hour. I think I covered mostly. What I'll be looking for is, like I said, retracement into that SIBI before going lower. It's possible we go higher. Of course, we have to keep an eye out for that. Going back to the question of, did we put in a smart money reversal on the higher time frames? Right, on the daily, we have this rejection block that we've been respecting. We took that out up over there, right? Put in, this is a failure swing up here. This one's failure relative to that one. And chopping sideways. Still have to see. But looking at the 4 hour here, we see this very neat trend line liquidity here that would not be a surprise at all if we come down. And we could take all this out and we're still not in extreme discount. Still would not be down to the bottom of this dealing range. So this is what I'm seeing on gold. Hope you found this helpful.